Greetings, ladies and gentlemen, and welcome to the latest weekly report for the 9th of February 2015. My name's Jason Beck. I'll take you through the next 5-10 minutes for the update. As we're talking about finance, must inform you that all advice is of a general nature only, must not be misconstrued as personal advice, and past performance is just that, no reliable indicator of future result. Okay, first up, let's have a look at the covered calls, and AMP rolled out or closed out the final lot of AMP. There was a few people left in there last week, and so locking in a solid profit there, just under 4%, 3.8 was the final result there. You can see AMP pushing into 12-month highs there. I'll be looking for if we do see a pullback around that 550 range, I suppose, in this area. Looking for a new re-entry there. QB's doing quite nicely. We were able to sell some calls there at the February 11.25 strike, middle of last week, I think it was Wednesday, as it pushed up $11.14. A lot of volatility in QB at the moment, which helped us get anywhere between 22 and 26 cents of premium, adding another 2%. So maximum yields for this trade is now pushed right up to 5.7%. And you can see today, nice strong candlestick. It's right at the top of its range, and at the moment that trade is sitting in about a profit of around that 3.5% mark, I think it is. But just 3 weeks ago to expiry, and if it's above 11.25 on expiry day, be exercised and lock in that 5.7% minimum. Just a quick update on Macquarie, because there was a few people left in the trade last week. They also hit their profit target of around 3.8% there, and yeah, as you can see, Macquarie, like AMP, also pushing into 12-month highs. Now looking into NAB now, I suppose the big news event last Tuesday was that the RBA did release a surprise rate cut, an interest rate cut, and that what really pushed the market into post-GFC high, taking NAB with it. We did set up a NAB trade that was mildly bullish, more looking for a bit of a pullback initially to trade out that in-the-money sold call at 55 mark. As you can see, we're well above that. So at this stage, there might be real exercise for that. I think it was about a 1.6% yield, which really isn't much, but I don't think many people predicted such a crazy move upwards by the banks, particularly in such a very short space of time. Looking at Medibank Private now. I've got the trade there. We entered, just an update here, we entered around the 236 mark. Stock's pushed up, we got very close to selling our calls at $2.44, which is our target price. Didn't hang around that mark for very long, so still waiting for that push upwards there. But overall, that trade doing quite nicely. And Santos from, I think last Thursday this came out, buying it around the 8.06 mark. The stock hanging around the same mark at the moment. We sold the in-the-money call option there just to provide us with a bit more protection downside, because it is a volatile stock. Did break into a new sort of 2-month high there earlier in the week, which provided a positive signal. So wanting the stock to stay above $8 would be spot on. But that trade doing quite nicely, and extends the profitable run. I think we're at about 8 profits in a row with the covered calls. So covered calls outperforming the portfolio at the moment. Of the 8 or so trades that we're running at the moment, we've only got one that's not performing as expected, and bit of a hedge here. We've been able to profit from the other bank trades on AMP, Macquarie and NAB, and this one not working our way. Still has time to work. We are expecting a dividend, and that could quite easily push the stock down. But at this stage, with the dividend of around $2 to $2.50, that will push the stock to below $90. We're still aiming for around that $82 mark, which is a long way away. but what comes up often comes down, and it was only in September we saw a solid $10 drop in the space of about a month. Wesfarmers is performing as expected and has looked like it's put in a good reversal pattern at that quite reliable, as it appears now, $45 mark. So that's heading on the way down, which is what we want for our trade. Slightly out of money at the moment, but the paying of the dividend should also help push that stock down. So once you factor in the dividend, we're probably slightly in the money. So that trade doing nicely. And lastly, Woolworths entered into this one earlier in the week, last week. Bullish trade to stay above 32. I think our break even's at 31.25. So we're well above that, and so even if this particular trade or particular stock stays flat or even goes down a bit, we can still realise a profit. But ideally at $32 and above, if it can stay there as a defensive, then we're doing quite nicely. And that stock breaking into a bullish trend there with successive higher highs, so that's the previous high. Then we had a higher low, which is higher than that low, and then a break of this level, which occurred here, and pushing upwards denotes the Gann theory of a bullish trend. So we're seeing that with Woolworths, and ideally staying above the high water mark of 31.30 would be spot on. Well, ladies and gents, I'll wrap it up there. Better week for trading, and perhaps a sign of more things to come over the coming weeks. And ideally, if we can have a very solid February, then that will go a long way to make amends for December in particular. Have a great week, and we'll talk again this time next week. Thank you for your time.